Hello everyone, and welcome back to a new episode of the TFDI podcast brought to you by the Trade Finance Distribution Initiative. Today we receive Atul Khekade, co-founder of XinFin Hybrid Blockchain. XinFin Network is a hybrid blockchain platform powering the next generation of applications in finance, banking, supply chains, and trade finance. The company recently teamed up with Tradeteq to tokenize portfolios of trade assets with the goal of attracting new sources of liquidity into trade finance. And Atul is here today to tell us how exactly tokenization works and why this is such a positive development for trade finance distribution. Welcome, Atul. Thank you for being here.
It's a pleasure. Thank you so much.
So first of all, can you explain to us what tokenization is for our non-specialist audience and how it works for trade finance portfolios?
Tokenization is basically, simply explained in a one sentence, it is the process of converting your sensitive data into something of a digital identity, a unique digital identity. But in a very practical or our original ways of working, tokenization is something that happens if you are able to put together an invoice. If let's say you are my supplier and I'm the buyer, and if you're able to put together the details of our transaction in an invoice and hand me over that in a paper format. This is exactly what happens in tokenization, except that it happens on the digital format. And when I'm accepting that invoice as a token, I'm in complete custody. You basically transferred the ownership of that token to me, and then it opens up unimaginable or scalable possibilities with this transaction that you can borrow against it from financiers or banks or the financial institutions, or there are so many ways in which these tokens can be used in creating a better financial ecosystem.
Mm-hmm. Interesting. Okay. So can you tell me a little bit more about what's so great about this system and what really it can achieve in the trade finance world?
Yes. So firstly, we have to look at what the market needs are. Looking at the Asian Development Bank report or several of the World Bank reports, there is almost like $1.5 trillion funding gap in the trade finance space, which means there is so much liquidity required by the market, especially the MSMEs, but it is not available from the banking world because the capital is already deployed. There's less capital already coming in, and there's more capital that is expected to be required by the originators or the MSME space. So that's the business case. First of all, there's so much liquidity that is required. In the COVID times, like COVID maybe just a couple of years back, this could have been the numbers. After COVID, it could be 5 times this, right? So that's a very strong business case for what the need from the market is, that the market usually needs liquidity. Now, how do we get that liquidity? Firstly, tokenization brings to you what is basically a transparency between when these tokens are exchanged or handed over from one party to another. They are also in our protocol standard, we put them on a public blockchain network, the XinFin blockchain network, where you are able to verify whether indeed these tokens were created by the counterparties, right? That is one of the first thing. Then it enables the external world to participate. It enables something of an alternative investor class to come in and participate in these tokens. They are able to provide liquidity. They're able to stake capital. So if you're an MSME, if you're looking for capital, and if you have access to tokenization, you can basically raise capital or borrow against those tokens. You can get access to the liquidity which is available in the alternative finance world.
Would you have to go through a bank to do that, or could you do that yourself directly?
So there are multiple options. If the MSME and its original buyer, the one who is guaranteeing the payment of the token, they come into agreement and they create a smart contract out of this agreement, then you can directly go in the market and raise that. But at this time, we do not have enough. So the network has that capability, but at this time there is not enough education in the market how to do that. So we still have to work with originators, which basically do the work of taking that financial origination and converting that into tokens. Now these originators can be banks or non-banking financial institutions or the emerging fintechs who each are able to, even the fintechs are very aggressive about MSME lending space, so they are also able to originate this finance. So it's from multiple sources basically. For the network, it does not differentiate how it comes from. The protocol standard is kind of same. It's about which counterparties are using the network infrastructure.
I see. Okay, really interesting. So where are you at with the rollout of the solution? Has it already been implemented, and what has the feedback been like?
So first of all, addressing a market of this size, right, which is potentially or possibly in trillions of dollars, is not an easy task. We have been working on several initiatives for the last 3-4 years, but one of the biggest uh, developments happened when we partnered with Tradeteq, which is which is a key participant in the TFD initiative. And the intention there was to create standards for this industry, which means if there's indeed a scalable trade finance distribution solution in the tokenized format, it has to be highly standardized. So we spent first quarter and some of the second quarter together just to create standards for how this tokenization can be done, both from the technological point of view and the legal point of view. And we are actually, we have actually done multiple transactions. So there are at least a couple of originators in Singapore who have already accessed the capital using this format. But we are rolling out a real live production solution in the coming days, potentially this month itself, so that we will be able to showcase how exactly the transactions have happened between counterparties using tokenization as a network solution.
What are some of the key legal and technical considerations that you have to take into account when rolling out tokenization in the trade finance space?
First of all, it was very important to provide an infrastructure for this large market, which we, at the core of this solution is a layer 1 blockchain network called XinFin, right? So XinFin is although we created the specifications of the network itself is run by multiple, community members and counterparties who each run the masternode. So first point was to get scalability into that infrastructure to provide infrastructure which could process millions of transactions, which was required in a networked way, not in a single silos company way, but which can be done over the period of or the span of a network. Secondly, creating that standard, as I said, because you cannot have a silo solution here. If you are indeed creating a token format, it should be accepted by not just that supplier or a buyer or a MSME, but it should be accepted by the entire ecosystem, including banks, fintechs, financial institutions, credit insurance companies. So this was one of the first challenges. How do you get the world to sing one song together, right? It's as good as that.
Yeah.
And that's one of the first, and that's why we've spent so much time in this industry. But we have actually been able to create a standard, that the counterparties will accept. The other part is, how do you map your existing legacy regulatory framework onto working with this, right? So there is no definition of tokens in many jurisdictions, because that regulators are still observing the technology. So the the approach that we have used is, why don't we use the repackaging methodology, where notes or some of the financial instruments are created by specialized purpose vehicles in particular jurisdictions, and give them this tokenization infrastructure. So essentially they are creating something which is well defined in a legal and regulatory framework, and they're converting that into tokens. So that gives us a first kind of go-to-market step, that look, it is both standardized and it is also created in a format which is backed up by a regulatory standard or acceptance in the background.
Mhm. It's fascinating to hear about the journey and kind of the obstacles that you have to overcome to make a solution that's both accepted by the market, usable, and recognized by legal frameworks. Do you foresee any other obstacles in the adoption of this technology, and how do you think that the industry can overcome them?
Yes, so use of public blockchains is still unheard of in the financial institutions and regulator space. Both markets are considered to be totally different. However, when we architected the blockchain, we created the whole hybrid notion around it, which means it would have the traditional functionalities of being private and being in that environment where financial institutions can accept the standard, but it would also give flexibility of that public network where you're able to trust or create a common layer of trust between counterparties, and at least the life cycle of the transaction would be verifiable. But it's easier said than done, because public blockchain comes with its own tokenization. It has its own way of dealing, because when you're accessing a public blockchain, especially in this case, XinFin is a network that's being used to create those standards. There are tokens, and there is you're basically reinventing the whole wheel. You're creating an alternative way of settling the transactions. You're giving an infrastructure where all this can be done in seconds. While it provides all the benefits, the market will also look at it in a more cautious way, and that's the only thing that we have to address at this time.
So a lot has to do with the mentality of the financial sector, right?
Exactly. It is once you are creating new standards for something, the market has enough awareness for the concept. Everyone knows what blockchain is. It can be useful in this. More often you see the market take negative news about it. No, it's not always that you'll see the information or the knowledge around the technology that, okay, bank A has used it for something to address a use case that was otherwise not possible before. But there are so many stories like this, and the market is not aware of it. We are dealing with still perception which is not in the right way, and this is brought to relate with something that people treated internet in the starting days as well. Now we're using internet for everything, right? Literally everything, but it is not how internet started. It was perceived in a very different way. So I
Yeah.
think it's the same challenges that we have to address as we move forward.
Yeah, that makes a lot of sense. So what's the next step for XinFin within the Trade Finance Distribution Initiative?
We're going to launch the first live transactions with the network standards that we've created with Tradeteq, showcase that to the market through the trade finance distribution initiative, then look at scaling up the transactions. There's an immense demand from originators in the fintech space who look at this as something that they did not have access to before, right? Because banks have access to liquidity, fintechs don't. But that doesn't mean that fintechs originate something that's not credit worthy. Fintechs, some of the fintechs in this space are actually in the unicorn status, and they originate some of the trade assets which are investment grade as well. So the next few rollouts are going to be live transaction, then more set of originators, both fintech and post possibly some of them from the banking world as well, to showcase even a bigger scale of transactions. And then we keep rolling this way, create a scale plus regulatory certainty around this that will help the market accept it in a wholehearted way.
Great. Well, thank you so much for all of these insights on XinFin and tokenization and all of the journey that you've been through. I'd like to end on a more personal note. So would you be able to share the latest thing that you read or heard that made you feel inspired? And it doesn't have to be related to trade finance, but it can be.
Okay, so I'm a reader. I read a lot of books, and I've written one as well. So one of my book that I authored. I self-published it during 2020 lockdown because there was no other way to go forward with it, but it is available on Amazon. It's the book is based on the concepts of ikigai, but the name of the book is Mikigai, right? That me sounds for my ikigai. It's more of a fiction, and it is that is the book is very close to my heart because it it sets forward what my everyday mission should be, especially obviously what I'm working on, what we're working on is highly technical in the banking space and trade finance space, and that it can become boring, right? Because it's too much of work. But you really have to find your sweet spot in the space that okay, this is what I'm really loving doing, and it's about taking that knowledge, understanding how economies work, understanding how the global trade works. So that curiosity takes you the long way, and that's the inspiration that also helping me go forward, uh, taking on the challenge along with our great partners and my colleagues and our partners together.
Great. That's really interesting. You've made me curious. I think you're the first guest who has shared a book that they've written on this podcast. But yeah, that's great. I'll check it out. We've run out of time, so I'm not going to keep you any longer. But thank you so much for all of your insights. It's been a really great conversation. And I'll also take this time to thank our audience and encourage you to leave any comments you have in the comment section. And we'll see you next month.